Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Good morning, everyone. It is Tuesday, May 21st, 2024. My name is John Pieranunzi, and this is the opening swing. Let's begin today, as we always do, with our news. Quiet out of Europe again. No Tier 1 numbers. Europe is slightly down, less than 1%. Nothing really big. Coming into the U.S. hours, we do not have an 8:30 news driver. There's Canadian CPI at 8:30. I'm not expecting that to be anything major for us unless it comes in dramatically out of line. Looking at the U.S. calendar, a ton of Fed speakers. Before the bell, we have Barkin, Waller, Williams, and Bostic before the bell. A few Treasury announcements, which are unlikely to be a big deal for equity traders. Then we have Barr again at 11:45, or Barr for the first time, I should say. And then after the bell, Bostic again. So a lot of Fed speakers ahead of tomorrow's minutes, and a little bit more data as we get as the week goes on. We'll skip the higher time frame charts because nothing has changed here, and we'll just go straight to the daily. And what was I talking about in the daily? I was talking about this high, which is the 49s and the all-time high. I was talking about this low, which is the 0575s. And this kind of being the bounds of our range. We can see on this profile, pretty nice taper here, pretty nice taper here. And this is toothy in the middle of this, but to me, it is still like the established range that we're within. What I've been saying really throughout the month of May is that I've pretty much remained bullish, that I'm remaining bullish as long as what happens. As long as pullbacks find support, check. So did the pullback find support? It did. Check. So I'm bullish as long as pullbacks find support and the prior high gets retested. Well, what happened here? The prior high did not get retested. So I guess that means no, it didn't happen yet. So what does that mean for me? That means that while we're within this area, 0575s, 249s, I'm looking at this as an area that I am at this moment more neutral as to what's going on here. More neutral. I still, by default, the edge has to go slightly to the bullish side, just based on what we've seen so far. However, for me, that's considerably weakened, and how this area here resolves, I've become a little bit more neutral about it. Based on how close these highs are and the tension building here, you know, there's still a strong expectation that these highs get taken out and we get those 50s, but it does not have to happen before we make a push lower to potentially find more buyers. So that's the key message that we have here on this daily chart, is that we've kind of established the bounds of this range. We see the profile and we're within it, and how price moves away from this or when is something that we do not know at this time. Something else I'll mention just to keep in mind, something to be aware of just in general, is if you do this, if this is what you do, if you're a trader, you have to be really, really comfortable with uncertainty, and not get too attached to opinions. Like, if you have some strong opinion about how the market is going to move from this area, what are you basing it on? Like, because to me, it looks like the people that move the market, like the institutional players, it doesn't seem like they've made a decision yet, because we're just staying here. So if the institutional players haven't made a decision or haven't made their decision known, then to me, it's, smaller traders certainly cannot know. The decision as to what happens out of here does not yet exist. That's kind of my opinion on it. I could be wrong. I probably am. It's just what works for me. But anyway, that's what I'm seeing on the daily chart. This high, this low, very important. And then in the middle, we have our former all-time high, the 33 halves. So let's go on to some smaller time frame charts and get into it further. Here we have our 4x20 PNF. This is the chart I like to look at market structure and MC profiles with. And again, we see that same, that area I was talking about right here. Also to notice is this is our gap zone below, which is an important area. What I'm kind of looking at on this chart, what I'm aware of is we have the high, slightly lower high. So we have kind of like this thing happening here. And then what I'm curious about is, does this tighten? Does this tighten into a wedge, which, you know, which would mean respecting these 0575s again and respecting the 49s again, and that would put all of our trade within this area today. If that happens, that will be, I will be very conservative in the S&Ps. Like if that's how this structure kind of happens, I'll be very conservative. If we have breaks, then the areas I'm looking at are the 15-ish, which is the Thursday low, and then obviously the 575s. And then above, obviously, the 49s. But from a structured perspective, that's the big thing I'm looking at here on this chart. Do we tighten and form a wedge, or do we break that wedge? Let's go over what the tests may be for each of those scenarios on a smaller time frame chart. Okay, here we have our 2x4 P&F chart, and let's give a quick discussion of important areas, which we've already kind of done it, but we'll do it again. Up here, this whole area, the 49 region, is obviously our high. And then right here, we have the 15s, which I've marked, which are the low of Thursday. And then we have the 0515s, which are the lower bounds of this area that I've been mentioning. Then below here, we have if we drop down below the 03s, we have the 92s, which are also one vola. And then here we have our gap zone. And like I just mentioned, the first kind of thing that I'll be looking at today is, does this action tighten? In which case we could see something like, a tightening action could be something where we do take the low, maybe get to this naked VPOC, and then just return higher, but kind of not move out of this area, not move too far away from the 33 halves. That would be the tightening scenario. That would also be the scenario that really provides the least amount of opportunity for us and the greatest risk, in my opinion, because there just wouldn't be enough rotations to provide a lot of opportunity. If you're a short-term trader like me, or maybe you're different than me, but what is beneficial to give you opportunity is just a lot of rotations, a lot of volume. That's a lot of opportunities, and if we get something like this, there will just be less opportunities. So this would be a day where I would want the number of trades that I take to be significantly lower, and I'd want to be just a lot more conservative with risk, because there would be less available for me to get my hands on. So if we get this, I'm going to be very conservative in the S&Ps. What are some ways we could get something other than this? Let's erase some of this. I will note that if something like that happens, like one of the key setups that I would look for, we go over this in our accelerator program, but would be a liquidity check and reverse on either side back to the 33 halves. That would be something I would be open to, is a liquidity check and reverse back to the 33 halves. If that presents, not sure if it will, maybe it will, and it's not something that's even tradable, so you have to be aware of that. But I just thought I'd add that. Let me get rid of these marks, and we'll do a quick discussion of what happens if we get something more interesting. So let's start with the downside first. If we get any kind of a move below, like say below this naked VPOC, the next area that I'd be looking at, and wouldn't expect it to necessarily hold to the tick, but these 15s for a test, where we could see, and what I'd really be wondering here is, do we get, let me clean some of this up. What I'd be really curious about is if we get a test lower that is a higher low versus the 05 halves. If we get a push lower, that clearly starts to find buyers ahead of the 15 halves, then I would expect, just as I said, some kind of reversion back to back to these 33 halves, back to this area. If we get something like this, that would be the scenario where we get a break of yesterday's low, but a higher low versus the 0515s. I think that could be a pretty strong possibility. Also, likewise, we could get something similar. However, we could get a lower low versus the 0515s that holds around the 92s, tests below century, and then we get the reversion higher. It gets back above century, holds on a pullback, and continues. At that point, I would look for 15s. I would look for potentially 24s. And if something really, really great happens, maybe back to the 33s. But I think one of these two things is potentially likely today. And I'm kind of being a little bit more specific today because on days when there's less that could happen, you try to be a little bit more specific about what you might get. But also you have to be careful because the more specific you get, the more the greater the chances are that you're dead wrong. But so these are two possibilities which could happen today. Now, the most bearish idea, in my opinion, would be if we got some type of a break lower, and I think this is probably possible, but lower probability today. If you got some type of break that got below the, and let me just clean all this up. The most bearish idea would be if we get some type of a break of these 0575s that gets down below century into the 92s, cannot recover above century today, and we end up settling, either testing the gap today and settling below 5300. That would be the most bearish idea for me. If we cannot get back, if we get below 5300, pressure the gap, and then we end up settling below here. I'm mentioning settling because, of course, like as I've really emphasized, any of these areas, oops, wrong color. Any of these areas could be something where we test, but then get back above 5300 and end up settling back within here. That's a real possibility on any test. But so that's kind of one possibility of, or probably in my opinion, the bearish possibility, which would be a break below 5300 that settles below 5300 and potentially tests the gap. However, like I said, it's vulnerable to a reversion back above 5300 that just puts us back in the same situation. What could happen on the upside? I think on the upside, it could still, like if we get a push up into these 49s and we're able to get any kind of a pullback that then holds and continues, I think that would still be a pretty difficult trade because I think we'd see the same kind of action that I've been describing, which is just sort of like this kind of stuff. This kind of like grinds for a new high, shallow pullback, grinds for a new high, shallow pullback. Those are tough trades, but that would sort of be what I would expect on the upside. There also, and of course, like I'll add again for completion, this is always vulnerable to a strong push lower that doesn't get the high, just like what we saw here. Push lower, can't, push lower, can't get the old high, extension through this low. That's what we're always kind of on the lookout for with something like this. When we fail to get the high, then all of a sudden we start taking the low and we look at targets below. I just want to flag that because that's behavior that we could see on any of this. We also could see instead something else we've seen a lot, which is just a very quick repricing early, where we're trading here and everyone's like, oh, are we going to go up or are we going to go down? What's going to happen? And then it just reprices very quickly and the answer is known. We're like, oh, we're going to trade higher. We get that repricing and then it just starts to grind from here. And we get that action just with more of a initial repricing, and then we just kind of grind. Again, on meaningful excursion higher, the 75s are the target for me. But I'm going to wrap it here because it's just remarkable how on days when there's nothing going on, I still continue a little bit too long. But I try to be complete each day, even if the S&Ps aren't going to be complete in their trade. I try to be complete, and I hope that it is beneficial to you guys. But that's what I'm really seeing today. I'm aware and cautious of a day that just tightens. And if we do get excursion, I'm aware that it could be a test and failure in either direction in several ways. And then if we do end up get meaningful movement, I think we went over the tests that are reasonable to expect. So hopefully this is pretty complete for you. If you're looking to get in the trenches with me in the S&P 500 today, it could be a little messy, but we're built for this, right, guys? I'll wrap it up here before it gets too long. I hope you're having a wonderful day. I hope that you can continue that wonderful day. I hope you can improve your trading in some way, even if it means sitting on your hands today, or even if it means missing that one opportunity today. If you want to do this as a professional, you have to learn to do that. You have to learn to be comfortable with failure, comfortable with uncertainty, and comfortable with overcoming those things. So I hope you have a great day in progress, and of course, I hope that you can find some way to make someone else smile today, because that's the most important thing you can do every day, in my opinion. That's all we got. I'll see you tomorrow. Let's get out there and clock some ticks, guys. Bye-bye.